Steve hates us. It's just taking his time.
Steve loves alternative assets, I guess.
I have, if he wants to, I have my Pokemon book now. So,
dude, I had Yu-Gi-Oh cards from like years ago. I'm sure they're worth something, but
you can retire today. That's what I heard.
That's it. That's what I got to do. Hello, everybody. Friday night, 11:07 p.m. Thank you all for being here. Big week in the world of Palantir. Not because we had a ton of catalysts or news, but we definitely had a bombshell report that was dropped yesterday. It definitely took us off guard. So I want to analyze it, go through it, kind of get our raw thoughts on it. We also had a bull report come out on Monday, maintaining the price target of 18. And then we were met with a more bearish report calling for a price target of $9 from Morgan Stanley. Before we get into that, Matt, how was your week? Anything you're seeing in the market that's interesting? We had a ton of jobs data, inflation data. Anything you're kind of seeing that you just want to get off your chest? And then we'll get into Palantir.
Well, firstly, I know you want to have me talk about Palantir second, but I'd rather just start off by saying Palantir is going to zero. And then following up with the fact that the markets data did come out, I think it's evident that the Fed will likely raise once again. Not because we need it, right? I don't think that it's necessary, but I think it's better to over adjust and try to cool off the hot market than and try to get things back under sort of a 2% sort of goal than to start thinking about cutting too early and then having to play this game of seesaw going up, down to in order to get us back to 2%. So I think with such hot data, and I think that's why you've kind of seen the market a little bit mixed afterwards. Initially, I think it's mooned after you kind of got this news of having less than 1 million jobs lower available than expected, which is a positive thing, meaning more people getting back to work and more and more supply there's less demand. Wait,
there's less labor force participation.
Exactly.
There's more labor force participation, which means there's less ability for employers to have less leverage. Employers have more leverage because there's more people to pick from, and there's less job openings, which means employees have to accept less wages.
So I'm fairly confident that means the Fed is going to end up raising another quarter point at least. So
okay, so you think there's one more? Got you.
Yeah, personally. So with that, I mean, I didn't do too much. I watched a rocket launch for Rocket Lab Saturday, or maybe it was Sunday, Monday. I mean, so that was cool. It was their 40th launch. So for those of you guys that don't follow that, I have a lot of information on that about my channel. Amit refuses to invest in them because he hates me. And then lastly, just continued investment in the S&P 500 as well. Every time I get paid. So,
there's a question I was going to ask about a certain stock. I forgot about what the question was. So we'll see if we get there at the end. All right. So let's get into Palantir then. All right. So going to zero. So it's a Morgan Stanley quite legitimately thought they were they were going to 9. It's a little bit more than zero, but to all investors right now, it feels like zero. Morgan Stanley puts out this report, drops 4 a.m. I was actually up at 4 a.m. because I slept at 9 p.m. And I was texting in the WhatsApp that were part of that. I was going to sleep. So that was the same night that happened. And I wake up, I go to sleep kind of happy because Palantir is at 1634. I'm like, I don't know why Palantir is up 5%, but that's awesome. It's almost close to 17. Wake up, falls right to 1550. And I'm like, people were texting me like, yo, what's going on? I'm like, I don't know. I guess a whale dumped their shares or something. And 2 hours later, I get an email from a money manager in Texas who sends me the report. And I'm like, oh, shit. And it's a 21-page report. And I'm like, damn, this move, the market's dropped to 10%. I don't know if you got to go through the entire report or kind of see what their core thesis was, but what was your reaction to them putting out that report? And how was your reaction to the market's reaction off one report, dropping them 10%, just like Dan Ives pushed them up about 15% a month ago?
Well, I'll just be blunt. I didn't read through it. I didn't really have a want to because I'm just a firm anticipation that a lot of these companies don't truly understand and have done the full due diligence as to what differentiates Palantir from, say, some of its peers like Snowflake and Databricks and stuff of the like. So to me, it doesn't really make sense. I mean, I don't want to cause some sort of echo chamber and say, don't read bear reports, but unless somebody came out with some sort of real nugget, which I didn't really see and or hear about on Twitter or any of your videos, then it doesn't really make me feel enthused to spend the time to read a 21-page report that on something that nobody really did true due diligence on. So um, just some initial thoughts there. But I mean, as always, I think $15 is at the current valuation. I think it's fully valued, right? I don't think that until we kind of have another quarter's worth of information, I think $15 is a good place to kind of hang out at. In fact, I think the price that it would be more appropriate would be $12 to $13 personally, where it should be kind of more of like an even fair value. But I think Palantir is always going to be one of those companies that trades overvalued when people start to recognize the true long-term potential of the company. But yeah, I think it's funny. Here we were, less than 6 months to a year ago, talking about maybe it'll get back to $8 a share, and now it's at 15, and we're complaining about it. So I think a lot of people need to keep their perspectives open and have a little bit more of a time horizon than 1 week.
Yeah, I agree. I mean, I think, it's interesting. Obviously, Morgan Stanley owns about 17 million shares as per their last 13F filing, almost 18 million. And the report comes out from the equity division, which apparently is separate from the parent firm, Morgan Stanley, that says we don't think Palantir is worth anywhere near $15. And it's just really interesting because, we can talk about this. You've been in the markets for a while, and sure, I'm sure you've seen this happen many times. 2 years ago, Amit would have seen a report like this and immediately sell Palantir, because I would be like, if Morgan Stanley says it deserves to be $9 and it's at 15, I should get out while I can. And 2 years later, you kind of see, well, even though the equity division is different from the parent company, it's very simple for the equity division that the parent company pays the salaries of, meaning they think they're worthwhile enough to do equity research for them, to give a call to the parent company that's buying all the shares and be like, hey, the stock's overvalued. Like, there's $9. Like, why? Like, sell, take your profits. And if that's not happening, or even if that is happening and the company's not selling, I think we would have seen a massive liquidation if 17 million shares were dropped onto the market. Then it likely means there's some kerfuffles, some weird coincidental reasons for why reports are dropping and the parent company still owns all this money. Any thoughts on like the conflict of interest that exists behind putting out a report, but then you look at what the company owns and it seems like they're incredibly bullish on the stock, given they own?
Well, I think a lot of people don't recognize fully maybe some of the games that you're kind of alluding to that some of these private money managers really play. And I think a lot of it is just making sure that people feel comfortable or get their name into the light, right? And having certain particular analysts give up their view to potentially bring themselves into the limelight, which would then highlight, hey, Morgan Stanley has a good view and I really like the article. Maybe I've been thinking about moving money managers. Let me move my $1 million, $2 million there. And next thing you know, Morgan Stanley's managing their money, right? So I still think that there's that underlying sell side sort of mentality that tries to force people one way or another, or at least keep themselves relevant in the news. And to be very honest with you, I mean, depending on, I don't know, I didn't read the article per se, but I mean, if it is a 1 year price target, with what the information we have on our hands today, I think what did they rate it as, a $15 or whatever? I forget what the price target was.
A base target of $9.
$9. Okay, never mind. And it was 15. Is that what it was? It was 15. They dropped it to 9.
No, it was 8. They upgraded it to 9.
Okay, but either way, I mean, I could fully see a reason why it could be $8 or $9 here. I mean, I don't. Too. So I instead of raking them over the coals, maybe I was thinking of a different company that raised their price target to 15. But even still, I mean, the company is yet to truly prove themselves in a long-term growth perspective, and it continues to slow down. Now, if that changes, I anticipate everybody and their mother is going to be updating their price targets into the 20s. If we actually do start seeing, I know 3Q, the goal is 16% revenue growth. I'm anticipating 4Q is going to be a 20 to 25% revenue growth. If we actually get back to that point, it's going to be a different ballgame, because you've going from 40% when you IPO'd, or direct listed rather, to the 30s, to the 20s, to now the teens, and you're going on a reverse trend, right? Kicking things back up. And so I don't know. I think a lot of it has to do with the games that some of these people play to continue to stay relevant. And Palantir at the moment is just it's a hype stock because it was up over 100%. And a lot of people are talking about it. Upstart, even though people don't actually care about some of these companies, retail investors get behind them, and retail investors will be the people that invest into the Morgan Stanleys eventually once they get enough funds behind them. And so you kind of look out for some of these companies and their wealth management that eventually I get messages all the time from Fidelity saying, hey, we can manage your money. And I'm like, I'll do it myself. It's okay. So, I mean, they're all selling something at the end of the day. They're all just sitting around being parts of the ETFs and stuff like that. But I don't know what Steven thinks.
Steve, did you get a chance to see the MS report on Palantir?
Yep.
What are your initial thoughts on their logic? Let's say the logic, by the way, real quick, because we didn't say this. They believe AIP revenue growth is going to come, but it's not happening fast enough. And as a result of that, they're saying, look, this is AI hype. We're pulling forward revenues from 2 years from in the future that aren't guaranteed. Company hasn't proven they can execute on that. That's their first big bear case. Mariana from Bank of America thinks the opposite, thinks like you should buy it right now because the revenue's coming. Second is the government slowdown. They think there's too much competition. So that's a government thing. And then third is they think the NHS contract and S&P 500 inclusion is going to be seldom used. It's not going to be a catalyst. So what were your thoughts, Steve, on the report?
My thoughts are nobody's going to know who's right until it occurs down the road and you look back. Maybe they're going to be right. Maybe we're going to be right. Who knows? What I think is interesting is 6.47 million shares purchased from Morgan Stanley at an average estimated price of $18.20 last quarter.
Wait, how do you know that?
Looking at Well Wisdom at the 13 filing.
Oh wow, they bought it at 18. Or is that accurate? They bought it at $18.
I'll share my screen.
Wow, I didn't know Whale Wisdom can report on monthly things. Wow.
No, it's for Q2.
But how do they know the average?
It says it right there, 18.20.
Wow. Well,
so this is from Morgan Stanley's 13F filing. So once again, I do not know if this is Morgan Stanley buying on behalf of their clients and what is in their client accounts, or if it is part of the ETFs that Morgan Stanley offers as products. Because ARK Invest is right above it. ARK Invest is not buying on behalf of their people. They're buying on behalf of their ETFs. So I tend to think, I could be 100% wrong, but I tend to believe that this is shares going into Morgan Stanley investment ETFs and funds and those types of stuff. Now, I've always said that I think it's, if you are an official firm that can put a price target on something and can put research out on something. So I don't know if you're buying shares and then doing price cuts, something there doesn't make sense. It's almost like you want it to go down so you can buy more. So I don't know. I'd like to know if this 13F filing is for investment products or for individuals that they have accounts with them. Because if it's people that have accounts with them that are buying and Morgan Stanley just has to report because they're actually holding everything under Morgan Stanley, it's a much different story. But if they're the ones buying it, why else are you buying that many shares at an average price of $18.20 other than you think it's going to go up?
I agree. I mean, if they bought the top, as we see in one of these comments, if that is accurate, that's not good. And look, these funds, they're known to like have euphoria when the market's going up, right? Because they're driven by their clients. And if they didn't, if their money's not in the market, their clients are upset, right? And so they have to buy. And so when Palantir was at 18, it felt kind of crazy. It felt like it had momentum. Got the Dan Ives report. It went up to 20. They probably didn't see it falling as much as none of us see it falling, right? Because none of these companies are really that smart about the markets. Do you think they have any logic around the AIP revenue growth not being here yet, therefore it deserves to fall? Because my counter argument was every stock outside of NVIDIA probably deserves some amount of correction. Maybe it's 45%, maybe it's 10% for Google in comparison to Palantir, because AI revenue has not implicated earnings yet. Everyone is thinking it will, which is why the market's buying the Magnificent Seven. If we take JP Morgan's or Morgan Stanley's argument for why we deserve to drop Palantir 50% because AI revenue isn't there, do you think that should be universally applied to other stocks that are in the AI hype cycle?
I don't think universal.
Too early to know.
Yeah, I mean, universal is not appropriate.
No, well, why not? Because Google hasn't proved AI is having a meaningful impact on revenue yet. So why don't they deserve a little bit of maybe it's 2% down instead of 45, right? Because Google's a much bigger company.
Universal would mean a blanket 10-45% or across everybody. I mean, to me, I don't think it's warranted because some people are just saying AI implementation, which will have a limited impact. Take McDonald's, for example. The AI impact might be a 1 to 2% margin increase because of their use of AI in their drive-throughs and some of the other things but it's not going to materially change their revenue, right? Maybe it will because they might be able to increase efficiency, get more people through, and at the end of the day, but it's not going to materialistically change their business per se, versus somebody else like a Google or an NVIDIA. So I just using the term blanket or universal, I think is not appropriate. And I think another thing that you're hitting, which I agree with, Amit, is because of how Palantir will be implementing AIP, it's going to be a lot like Amazon for a long time where, I'm not saying they're the same company, but I'm saying a lot of people didn't fully understand as to why Amazon was trading at such a premium for such a long time. It could be where, people trade Palantir at a premium, or it could be where Palantir gets underappreciated because they're giving away so much for free. And I think we have to kind of understand what camp they're in the long term. At the moment, I think they're slightly overvalued comparatively, but if we see large amounts of client growth, and I don't know, I'm not 100% sure what I'm trying to say, but I think the thing that I recognize is it's not appropriate to evaluate Palantir right now on their AI product because it's just literally within 3 months of it being released. And you can't really understand what true impact it's going to have because they are giving it away for free.
But that's kind of my point. Morgan Stanley is smart enough to know in 10 weeks to dock a company 50% because AI revenue is not there is an insane argument.
How did they dock it? They went up 12.5% on their previous price target.
Well, they're assuming that the hype cycle around AIP is not going to be as strong as they think it can be. And so as a result of that, they're saying the current levels are ridiculously overvalued. I know they upgraded it, but I mean, Bank of America has it at 18 because Bank of America thinks the AI revenue is going to be there. So that's what I compare to. JP Morgan has it at 9 because they think the AI revenue is not going to be there, or they think it's going to be there, but it's not here yet. Therefore, it doesn't deserve the premium.
So this is the same stuff that you talked about with Dan Ives, right? I think you're getting too caught up in what other companies think. And a lot of these companies, like they already iterated, they had it at 8, they moved it to 9. Next quarter, they might move it to 11. Like it's a moving target, right? And you have to think like, what time frame are they truly talking about? And it goes back to what we always talk about. Are you trading the stock? Are you buying it on a swing? Are you buying it for 10, 15 years down the road? I mean, I literally have this argument with my brother-in-law all the time because all he talks about is this little play account that he has where he's trading 0-day SPY contracts. And I try to have a meaningful long-term conversation with him about how I'm buying Dutch Bros and how I think that their company, and his eyes gloss over because he didn't actually care about investing in a company. He cares about the 0 DTE, 1,000% sort of shit. And so it all just depends on the perspective of who you're talking to. Just like how my perspective against what I'm investing in is going to be completely different than yours, Amit, because you're 25, I'm 32. I have a 7-figure sort of portfolio, and you're kind of getting just started, and you're into 6 figures at this point, and you're kind of getting your footing and learning. So it all just depends. Like it's worth a conversation, but to me, it doesn't bother me because they're going to come back in 12 months or three months and upgrade it depending on what the latest quarter is. And you did the same thing with Dan Ives, and I respect what you're trying to do. You're trying to entertain your people on the podcast. You're trying to entertain and get that hype within, where you're saying, "Oh, Dan Ives knows something. It's going to 25," and it was complete bullshit. And you and I both know that. But at the end of the day, you brought it to light anyway to try to bring people onto the channel, and I recognize that that's part of it. But these price
to be
targets
fair,
are
I
huge.
had a theory. I didn't say Dan Ives knows.
No, and then you said it, and then people dragged me through because I was, me and Steve both.
No. The reason people dragged you guys through is because you didn't have a good argument against my argument, or you weren't able to communicate it well. You had a good
and then
argument.
he came, and then in the next week he came on, and what did he say?
No, right. He said what you guys should have said, but you guys weren't able to communicate it as well as he was able to communicate it. That's the difference.
We said it was a 1-year price target, and he said.
No, I get it, but the point is, in a debate, right? Audience perception is everything. So my argument was simply, why is the timing of the report is bad? You and Steve didn't.
There's wishful thinking. Wishful thinking was the reason.
It could be wishful thinking all it wants. It's an argument.
People can bias themselves to be like, oh, it's 100%. Timing is everything, and blah blah blah. Your argument wasn't better than mine or Steve's. It was just because people wanted to believe something and they didn't want to listen to the truth. Just normal
the communication of the argument was better than you and Steve. And that's not me trying to be narcissistic or egotistic. That's just the audience reaction, right? Like, I lose debates all the time on Finance Junkies. It's the audience. They tell you what they believe or what. Now, the audience was wrong. I was wrong too. But the debate itself, what came down to communication. It just came down to what argument makes more sense. And my argument was, it's weird that the timing of this is happening right now. That's it.
Yeah, but once again, he's one analyst, and it doesn't matter if you are an analyst on a big Wall Street firm, you work at a family office, or you just read research on your own. Nobody can predict the future. Some people have better information. Some people are able to aggregate the information better. Some people have better insight, better intuition, but nobody can predict the future. If they could, they'd be retired.
I agree. And ultimately, I agree with that.
Hold on. So in regard to Palantir, it could go up. It could go to 25, but it could also retrace and go down further. Now, in regard to API, nobody knows what it's going to bring in. The beauty about API is
API is going to bring in nothing.
It has the potential.
AIP might bring in something, but
okay. AIP has the potential to bring in a lot down the road, or be a Trojan horse into bringing more into Foundry and Apollo and Gotham. I mean, we don't know exactly what the numbers are going to be because Palantir doesn't even know what they're going to do. They're going to figure it out along the way. They've already said that. And the biggest portion is, if AIP is as good as what everybody suspects it's going to be, and if it becomes a fundamental piece of a company's back office and what they use it for, getting off of it is going to be very challenging. And that becomes a need, not a want, for running your business more efficiently. And the price that you can command on a product like that in 2 or 3 years from now is huge. And the multiple on that tech in an environment where AI becomes the next computing platform could be very big. So I would, like I said previously, I wouldn't be surprised if Palantir retraces. I wouldn't be surprised if it goes past 25 in the next couple of quarters if AI software really catches on and we see a huge influx of companies.
No, I agree, and I think this is the unique discussion, but about this, right? We were definitely, or at least my argument was wrong. So Matt is correct on the Dan Ives timing thing, right? The point of discussion was that it's just super weird that it's coming out at that time. Did it mean it? He absolutely knows it's going to 25? No, but again, the timing is weird. Yeah, Same thing with this thing. But the Morgan Stanley thing, the timing is also super weird. I mean, like the stock.
That was a weird.
It's because the Morgan Stanley thing's not weird.
Yes, it is very weird.
It's not.
There's the thing. You keep saying it's weird. Do you know how many times these people change their price targets for stocks?
No, I get it. I'm just saying, like, first of all, the stock.
You don't, because you keep saying it's so weird. It's so coincidental. It's not. It's
people, they do. Put it on the last day of August. Second of all, it pumped ridiculously on Wednesday. Like, there was no need for it to go to $16.50. The market wasn't even up. It just randomly pumped, and then it falls 10%. Like, we can all agree the report caused the 10% fall. That's not tinfoil hat theory, right?
Other stocks went down too, not just
no, but I was up at 4 a.m. The entire portfolio was green. There was one little red company down 5% in 1 minute, 4:01 a.m. So my point is, like, yes, they're going to put out in 3 months. Matt's right. They're probably going to have an upgrade to Palantir because it's all bullshit at the end of the day. But the point is, the timing of a lot of this stuff seems to be for opportunistic things to happen, whether it's on the bullish side or bearish side, unless you're super long term, like Dan Ives is with a 1 year price target for the whole year.
But you got to remember, Dan Ives has been an analyst that has called things correctly in the dot-com era, internet age, cloud computing, smartphone age, whatever you want to call these different ages. And he sees this the same way that I see it going forward, because I do believe AI is going to play a huge role in computing.
But so does Morgan Stanley.
Over the
It's
next
not like
5
they
to 10
don't
years.
think that.
The question becomes which companies are going to monetize it. And right now it's questionable with Palantir.
I get it, but Steve, my point is, let's just use Bank of America and Dan Ives. They think the exact thing you think, which is why they have this 1 year price target of 18 or 25. Morgan Stanley, we know from all the other reports they put out about companies, they believe AI is a thing, but they feel the opposite around Palantir. And so I think the whole point of us having this discussion is, why does one firm that's pretty well respected, Morgan Stanley, have such a weird perception from these other two firms when they're looking at the same data? And that's when you get into arguments of, like, are they trying to be opportunistic?
Why do people vote one way and then vote another? People can see the same exact thing and have two different opinions on it. It all depends on the analysts that they have at the firm and the people that work at the firm and what their opinion of it is. Yeah, and that's why every firm has different.
I have the same data as Vitaly, Carlos, and a lot of other folks about Enphase. And they say, oh, well, the revenue's been flat for 3 quarters. I think it's a great opportunity to buy because I think it'll reaccelerate in the future. And I sit there saying, if it's been flat for 3 quarters and interest rates are only getting worse, those things trail, right? You can't get a solar system installed overnight. Yeah. So my thought process is it's likely that revenue is going to continue to go down. And it might be challenged for the next few quarters. And then it might be appropriate to reevaluate the company, whether or not it's a long-term buy. And I'm okay waiting on that, right? Like, I'm okay. Like, I don't have a huge sort of need to buy Enphase right now versus a lot of other people. They're buying into this perception that, solar is going to the moon. And so they could be right. They could buy right now. And then next thing you know, revenue goes up, but I just don't see it happening right now. And so that's the same exact argument that Steve is talking about, right? They might say, AI, it's great. In 10 years, it might be something. But in the next year, the time horizon in which we are putting this price target out for, they're giving it away for free. Their growth rate is still 13%. Right now, it's overvalued at $15, just like all of us have been talking about. So unless we see data that proves otherwise, like massive customer count growth, actual revenue coming through, then they're going to stick to their $9. I completely understand where they're at.
The big thing that Palantir has going for it is software is an expense for companies. So in order for companies to implement new software, it has to create synergies, efficiencies, and in most cases, savings. Otherwise, there's no use in implementing it. So the big thing here is customers of Palantir are going to get AIP for free at the moment. And you have these conferences going on, and people are taking it very seriously based on what their customers are saying. And we're not seeing other companies like that right now. So Palantir could be the front runner and could be the one that a lot of people gravitate to on the software side. It is still very early. But people are not going to be implementing 3 different AI softwares to try to do the same thing. I mean, I go back to HR software, finance software. You're not implementing Workday and Microsoft Dynamics. You're implementing one or the other to run your back office on. You're not implementing ADP's HIRS system or Paycom's HRIS system. You're implementing one of the two. You're not implementing both to do the same thing because it's a waste of money. And you just would never do that because everything would be a mess. So Palantir is doing the smart thing by giving everybody that first dose for free, getting them hooked on it, and then they'll figure out a price later and start charging them. Or they'll charge them in other areas. And then if they're using that and utilizing it, They have no need for company XYZ because they're doing everything with Palantir.
So
And
although you think that give it to them for free, price later strategy is smart, you can also sympathize with Morgan Stanley thinking the stock's overvalued because of that exact strategy.
But hold on, it could be overvalued today based on revenue, free cash flow, and where they're at financially. It's not overpriced because they're giving away this for free. That is not why they're overpriced if they're overpriced.
I mean, that was Morgan Stanley's core argument. That was the basic thing they made.
I think that is not the best core argument to make about why it's overvalued. I think you can make an argument based on fundamentals and how expensive it would look on a price to free cash flow, based on future growth, or even a price of sales if you want to use it, which I hate using. But you can make an argument around multiple things. But saying that it's a bad strategy and that's why, probably not the best, because guess what? If you're giving this to free for all these companies and then they really like it and it's working and showing results, they're not going with another company. You just chopped off the legs of all the competition. Yeah. So it's a very smart move, because once those teams get used to it and the people are used to using it and continue to use it and generate efficiencies, generate results, they're not changing to something else. They don't know if it's going to work or not. Like, it's just not going to happen.
So I have a question for the group. So knowing that Palantir does not use their own cloud, they utilize AWS, they use Azure, they utilize GCP, Google Cloud Platform, for those who don't follow. And we've seen this massive increase in AI computing power coming from the NVIDIA sales of, at least, let's just say, for example, $4 billion of additional chip sales at a minimum from NVIDIA just this quarter alone. Let's take 1Q out of it, because that was also an increase. If you just do some quick math, 4 billion, we know these things sell for 35 to 45 billion. Let's just call it, $30,000 to $40,000, $35,000 to $45,000. Let's just average it and call it 40,000, right? So you have 4 billion in extra revenue, 40,000 a piece for these extra chips. If that's where all this drive is coming from, that's 100,000 chips, right?
Yeah.
That's going to Google, that's going to potentially Amazon, that's going to all these other cloud service providers that are updating to be able to help with these sort of computations. Is that direct correlation to potential that is coming from usage in AIP or OpenAI, specifically ChatGPT? I mean, I'm curious as to who's leading this forefront for the need for 100,000 chips just in Q2 alone being ordered from NVIDIA. And that, knowing that, Palantir is not going to show up on the list because they don't utilize their own, they use other people's cloud, which I don't necessarily agree with per se, but just wanted to throw that in the room and see if there's any thoughts as to what that might mean for AIP usage.
So I can take that first. I think one thing is, a lot of these companies are buying the H100s and all the other chips you're talking about just to hoard them. And the Snowflake CEO said that a week ago on their earnings, that he knows they're going to use them somehow. They just don't know when. So they're trying to buy them. So I definitely think a bunch of companies are trying to hoard them. In terms of Google, Amazon, and Microsoft, from a cloud computing perspective, they're definitely buying them to be able to help the clients train the models. Just like you said, Palantir running on one of those guys. Palantir helps companies train models. So those models have to be trained in some type of larger cloud that Palantir has no revenue coming from, which would be GCP, AWS, or Azure. So I think the argument, and this is what Dom was talking about last week, is that if there's a shit ton of demand from NVIDIA for these GPUs, that means it's because companies are being trained. And what Jensen Huang said in the earnings call was that the reason there's so much enterprise demand for our chips was because enterprises are realizing that our employees are more productive if they can utilize generative AI and accelerated computing in their workflows. And he's like, this is just the beginning. Because
but you gotta go a step further, though. And you gotta remember that Amazon for AWS, Microsoft for Azure, and Google for Google Cloud all have huge data centers.
Yes, that's
and
correct.
To differentiate and to stay ahead of the curve, they have to stay up with the latest technology, which means upgrade cycles, and to make the moat around their product even bigger. And if they're the ones that have the computing power and the type of compute that customers need for future products, and an IBM hybrid cloud does not, or whatever the other big ones are, then they're just going to gobble up more of the spend in the future. So it's also part of necessity, not necessarily use case today. It's about future use case also. And then also data centers that are building it out that aren't part of them, that are for hosting reasons. I mean, there's all sorts of reasons why the cycle is so huge right now, and it's going to continue to be huge for the next couple of quarters.
Yeah, and I mean, to Matt's point, if all those models are being trained on GCP and AWS and Azure, and they're trying to stay competitive and ahead of the curve to offer the ability to train those models from a cloud computing perspective, it has to be because organizations see the use cases for LLMs. And talking to our good friend CodeStrap, he is like very, very bullish just in his conversations that every organization in the world will either have to use it or they'll be out of business if they're not implementing this stuff because competitors are just going to be better, which means that's the demand story for AIP. I guess the question just remains, we could talk about this, right? ChatGPT for Enterprise launched this week. Any thoughts on how Microsoft might be able to take Palantir's lunch if they're able to implement that a lot better? I mean, that's a hard one to deal with, right? Even though I do think AIP seems fundamentally different than ChatGPT for Enterprise, just in terms of like the infrastructure.
Yeah,
that
but
Palantir's
you got to
selling.
think about what really is ChatGPT for Enterprise versus what does Palantir do? It's two completely different things. I mean, Palantir's software is an operating system for manufacturing, for pipeline, for many different things. ChatGPT for business is probably, I have no idea, I've never used it, but I would think it's just a more robust, more accurate thing than what we have on the consumer side.
Yeah.
Yeah,
Which is more of a personal assistant that can cut down on a lot of time and make things more fluid when you're working. Whether you're a coder, whether you're an accountant, whatever you are, need to know something, it reduces the time to figure it out.
The thing, I have so much time series data, pressure, temperature, production data that scrolls through Foundry. We've in the 10 years I've been working at UDoc, we have never had data streaming through any sort of Microsoft product. And so at the moment, even if you were to implement some sort of chat GPT like model within, say, a operating system, like what is it going to do? Search our Word documents? Like I don't know the answer, but to me, I just don't see it being as useful, because if that's the case, it might be searching a Word document. That Word document might be from 2021.
So
and the data updates 24/7, and so I just don't understand.
And Matt's a perfect person to ask this following question. Matt's been using this for quite some time, and what you just said about Microsoft and launching the ChatGPT for business, et cetera, Matt, whatever you've been using Foundry for, do you really see going through another product and replacing the current workflows that you have going through Foundry?
No, I mean, you
don't have to say anything else.
Yeah, it'd be pretty difficult.
And once again,
it was a pain. It was a pain to get started on Palantir. I mean,
yeah.
I'm not gonna lie. I mean, so to have to go through that process again, before it really started paying dividends was 12 months to a year.
And I've said this at least 3 times on this podcast. When companies go through large scale implementations, whether it is what Matt is doing or what other companies are doing, no company wants to go through an additional large scale implementation to replace a product that's working, that they're having results with. In order to do that, there has to be such a significant type of benefit. Like for our company to get rid of the ERP system that we're using and go to a different one, something catastrophic would have to occur. I mean, we are locked and loaded, probably not going anywhere for a very long time. It just wouldn't make sense. I mean, a company doesn't just implement these things on a whim. They go through a robust RFP process. They make a decision that's best for their company. They bring in consultants unless they have the internal manpower to do it. They implement the new product suite they put everything up on it and then they start using it. The amount of time and internal resources that takes is large. Companies aren't going through that again just for the hell of it.
And
So
I've
once Palantir has you, pretty good chance that you're staying with them, especially if you're seeing results.
Yeah, and I think another piece of it as well, exactly what you said. Been working at UDoc now for 10 years, and I've never had a Google employee sit down next to me in the chair and say, "What are your problems?" I've never had a Microsoft employee. I've never had an AWS employee sit next to me and say, so what makes you think now that just because they've introduced ChatGPT for enterprise, that they're going to embed themselves in your organization for the next 12 months to help you build a large language model from scratch? You
And
either
keep in
have to
mind,
have built one you're on your own to be able to truly utilize a ChatGPT sort of product, or it's just not going to work as you intend.
and remember, not every company is going to need a Palantir product. Some
Yeah.
companies may be better off with a Chat GPT for business. I mean, for a small business, Palantir product may not be a good fit. It just may not be worth it. And this other style product is going to be much better. But at the end of the day, in large scale organizations in manufacturing and these other areas, there's a reason Jacobs is partnering with Palantir in the capacity that they are. There's a reason that these other companies are partnering with them and creating proprietary products to sell down the value chain through their partners and implement through their partners, where there's going to be more than one winner. And Palantir, it looks like, could be one of the winners in the large scale, medium scale enterprise. I don't think they're going to be the winner in the small scale because small scale isn't their demographic. It's not what they're geared toward. So there's going to be multiple winners.
Let's transition to the NHS deal. We should be getting an update on that in like 2 weeks, 3 weeks. Mariana from Bank of America, in her report, she's bullish on us getting the deal, but she also acknowledges that some of the patients in the UK have signaled to the NHS that they won't give up their data willingly, voluntarily, if they know a private company has access to it. And so there is a world in which the government ends up just not giving it to Palantir because they're afraid there's going to be too many people that opt out of submitting their patient data. I've had other people on Twitter who are from the UK, tweet at me saying, "Look, no one cares about Palantir. Like, we just care about the NHS getting better. We don't give a shit about data privacy and all that stuff." So it's, what do you guys think? What's your gut feeling? Do you think we get this deal? And if we do get the deal, what do you think it does for the company overall?
Dude, if I have to go to the hospital, the last thing I'm asking is, where's my data going?
Yeah. No.
I mean, it's just not something that's going through my mind. Like, if I have to go to the hospital, am I really asking a question of who's doing the back service? Like, I'm trusting that the hospital did their due diligence. That's not on my list of concerns. Whoever is talking about this is probably just not happy with Palantir for other reasons.
I first and foremost agree with that, so I don't want to devalue that statement. To me, I would prefer a company. I mean, this is my bias coming through, obviously here, but I would prefer a company like Palantir having it, because say they end up working with other government agencies within the UK, and it's like, just like the way we use Apollo, or Apollo needs to be needed, they can then give access to my data to multitude of different entities in the UK government at that point, and I don't have to provide that again, right? Think about every time you go into a different doctor's office and having to need to fill out your information again, and then them storing it in a different database, and it's then, it's like, I just told this to my pediatrician. Why do I have to tell this to my dentist? All this stupid shit that you wouldn't have to necessarily go with anymore if everything was just stored under one database, right? And I think that is where I eventually hope Palantir kind of gets to, where there's intermingling and webs of databases that connect to each other on all the different sort of back end databases that communicate internally at the government. So that way you don't necessarily have to do it. And I think, in honesty, if Palantir was smart, they would make a consumer focused product to allow you to basically have access to an Apollo, which allows you to hit yes, I'm granting this agency to connect to this database. where you can then pay a couple dollars a month or whatever it is to kind of say you have a lot of different doctor's appointments or kids' doctor's appointments or something of the like. It's like you already have everything on your phone and medical information on your phone, and you go to a new pediatrician and they want to have your kid's data, you can just hit yes, and it automatically uploads it to and gives them access to that data. Or say you go to the Canadian government, you have the same opportunity to allow them access to your data, and you have it available on your phone to be able to provide that. I think that something like that, a product like that, would be very useful, because then it gets back away from what the true matter at hand is that Steve just talked about. Getting the person that's showing up fixed, whether it's an emergency, whether it's, it just add efficiency. Now, of course, there's always is my data going to get hacked? Is it going to get used against me? There's a reason why Palantir is IL6, right? They know they have the procedures and protocols in place to provide that sort of security blanket, and hopefully people can sleep well at night. But there's always going to be political propaganda that shows up against it.
Yeah, I agree. I mean, I thought you were going to go the direction of like make a MyFitnessPal type of copycat, but tailored towards consumers, which I think also would be pretty cool if Palantir could do that. Obviously, that would be a much more difficult challenge, but I think getting this deal is it's pivotal, like for the company, because if we don't get this deal, it means the stigma of all the negative sentiment around them, like it's not going to make or break the company over the next decade, but it's definitely going to suck, because it means that it really did stop them from getting a big contract. And if the UK decides to give it to another tech company, I'm sure all of us will deep dive into that tech company. And if that tech company is appropriate enough or better than Palantir, or we look at their stuff and we're like, oh my God, is their tech that much better? And if it's not, we would all know what the answer is for why they didn't get the deal. So I hope we get it, but I'm kind of skeptical. At the last minute, the government's going to pull something where they're just afraid of the backlash.
But if they don't get it, it doesn't change anything on the enterprise side. It just
no.
It just means that they went with a different company, and depending on how good the company's tech is, it's either a smart play or it's a political play, and that'll come out. But ultimately, it's not going to stop Palantir from doing business with the United States government. It's not going to stop Palantir from doing business with other governments. It's not going to stop what they have in the pipeline with Jacobs or Cisco or BP or anybody else. I mean, yes, there's way more upside if they get the deal, but it's not a deal breaker if they don't get the deal.
I think it'd be likely that what ends up happening if they don't get the deal is that when contracts come up for renewal in several years, they end up re-signing with Palantir, just based off of knowing that, they had Hospital 360, and then it was unfortunately taken away from them. And I'm sure you're going to have a lot of nurses and a lot of others complain because they have to learn a new system, one, and then two, that system is likely not to be utilized. It's pretty funny. At UDoc, we'll end up, we sometimes still use consultants to kind of create these other applications. And then after about 6 months after these consultants leave, they start having bugs, and then nobody can fix them. And then eventually we just embed whatever they did into Palantir because it just works. And what happens? We no longer have to hire those consultants anymore. Like it's pretty funny. It's like we should have just done it at UDoc in the first place, instead of having, like, we should have just called up some forward development engineer, be like, hey, we want to implement this into our workflow. And, but instead we have this new conversation, these new people that can solve our problems, and boom, and we've done that several times with several different applications at UDoc.
Yeah, it's going to be interesting. Look, I ultimately think we will get it. If they do segment it and we get a part of it and other companies get a part of it, that's like the NHS's way of, it's a cop-out, essentially, of not really fixing the problem and trying to deal with everything going on in the public. But there's a part of me that thinks, CARP will get it done. I mean, we've been lobbying them. The head of digital AI strategy is now working at Palantir. I mean, we've just done so much work to get this deal that if we don't get it, it would be interesting.
I mean, have we ever heard anything about CARP meeting with the heads of Finland and stuff a year ago? I mean, have we heard any follow-up associated with a lot of that stuff? Or is it kind of just gone radio quiet? And who knows, maybe we're supplying them with stuff as well. It's just not publicized.
Yeah. All right. That is it for us this week on Palantir Weekly. Thank you all for joining. Steve's Twitter will be in the description at Dividend Streams, even though he doesn't use it enough. He needs to use it more. Matt is on Twitter already So you guys can follow Matt on Twitter, and his YouTube will be in the description.
Hot
pretty much it.
Steve, do you want to see these cards now that I'm back home?
Yes, show me.
I don't know which one you want to see, but I mean,
I
I
don't
have a
know.
bunch.
Are they Pokemon cards? Oh yeah, they're Pokemon cards.
Gotta catch them all.
A big book of them.
When did you? You've been collecting them for years?
Yeah, I mean, I just never got rid of them. I mean, I've had them, since I was really young, when they first kind of came out, and I mean, just held on to them and felt like one day that they would be worth some money, and I don't really know what they're really worth. But
Okay, so you need to go to pokedata.io, make a free account, click on the set that those are, and then start looking at them. And if the graded value is
this one's
more
pretty
than
bad
a
condition.
$25 or $30 spread on base, send them to get graded. Because some of those cards are probably worth a pretty penny.
Yeah, some of them are in good quality. Like that Articuno that I just showed you is not good quality. There's a lot of scratches, but this one's pretty good quality. I could probably.
Are those
wipe
from the
it off.
99 base set?
Yep.
Dude, you need to get some of those graded.
This is the best comment. Amit, are you a Pikachu or a Pokemon? Because I want to get a Pikachu. It's a good one. Matt, how much is the whole thing worth? Your whole portfolio of Pokemon, if you have to guess.
Pokemon? I couldn't tell you.
I think your weekend project needs to go to pokedata.io and take a look.
That's crazy. It's crazy that Pokemon and Yu-Gi-Oh was created in Japan. Like Japan's the center of all of this
They're
stuff.
huge.
That's crazy.
Yeah,
Wow.
I mean, you need to take this a little seriously.
Yeah, I mean, I bought them because I thought that they would be worth something someday.
And you were right.
My mom, instead of buying me little trinkets, I would always just get Pokemon cards, and luckily,
Yeah, you need to take a look.
And these are all I never played with them, right? So most of these are in pretty good condition. So I traded some of them and got some of them, and I think that's the majority of the.
Do you have a Charizard in there anywhere?
Nah,
Oh.
no Charizards. But then there's some that I got in the early 2000s as well.
Oh, those could be worth some real money too.
Yeah, those can. Early 2000s. Pokemon was big.
I never got any of the whatchamacguys, the newer versions and shit like that. So
anyway. Matt, I just bought this. I showed it on SoFi.
Oh, there you go.
Spider-Man.
Todd McFarlane autographed Spider-Man 1 in a 9.8. I'm telling you, alternative asset weekly, Amit.
Dude, I just don't care enough about it. If I cared, I would have, but
what do you care about, Amit?
Bro, I've never been you're never gonna open that comic book. It's just, I never liked stuff like that.
Yeah, it's
I get it's worth
asset.
something.
It's liquid.
I get that, and I respect
Go on eBay. Look at them out there selling them out bids on them. They're liquid.
There's a market for them. It's why I never like buying shoes or stuff. People collect their sneakerheads that just stare at their Jordans all day because it's I never got into that.
What is this thing? PokemonGrade.io? What is it?
It's pokedata.io.
That's your weekend project, Matt.
And then on the top left, click on sets, and then scroll down to the 99 base. And
you guys might not ever hear from me again, man.
I'm telling you, this is your weekend project.
But anyway, Steve, are you coming to Vegas or no? You hate us?
Probably not.
Yeah,
all right. I knew it. I knew Steve would do that.
I thought he was our
friend.
It's
the worst time of the year for me.
It's okay. Well, we know you don't love us. We get it.
It's not that. It's insurance renewal season. I really am having a hard time justifying being out of the office during the tail.
You don't want to celebrate Amit's birthday. We get it.
Of course. Also, Steve, it's a weekend. It's a weekend. It's Saturday, Sunday.
It's not. No. It's never Saturday, Sunday.
You fly in Friday night, Saturday, Sunday. You fly out Sunday night or Monday morning. That's it.
Yeah. And then it takes a day or two for me to readjust and freaking.
Just don't drink that much. You'll be fine.
Dude, I'm not 25. Even if I don't drink at all, it doesn't matter. still takes a toll on you. Like, I'm
Still
not
takes a toll.
sleeping. Like, I don't know what you don't understand about this. Like, I'm going to sleep like 2 hours a night.
Why? You could go to sleep at 4 a.m. and we'll wake up at 11. You'll get 7 hours. It's not a big.
No. Yeah, obviously no. Like, you would be going there to like socialize and have fun and do this. No. It's not what I'd be going there for.
What would
Be
you
at
be
the
going
crap
there?
table the whole fucking time of the poker room.
That's true. He wouldn't even hang out with us. He would be just at the crowd.
I'd see you guys at dinner.
Craps would be.
Matt likes craps too. So.
Oh, well, this Blastoise might be worth a little bit of money.
All right,
Matt,
we
you
got
play
to. I
craps?
got to go do stuff. That's it for us this week. See you next week. Hopefully, we can convince Steve to come to Vegas next
Steve,
Not gonna
you
convince
can
him, it's just
stay
a bad
on if
time.
you want.
It's a
We can
bad
chat.
time.
Mick can leave.
I can
Matt,
leave. You
you
guys
play
want to keep
craps?
going?
I mean, you can end the stream, and me and Steve can talk. In the
Okay,
background.
gotcha.
Yeah.
All right, everybody. We'll see you next week. Bye, guys.
Thanks, y'all.